Hey, it's Matt with PriceActionTradingSystem.com, and it's Tuesday. It's April 27th. This will be our chart lesson for the day. And we had a spike in channel down that kind of petered out, and most of the really from just after 8:30 to the close, this is all sideways stuff. There is a bit of a downward trend here. There's a little bit of a slight upward trend here. So your bias was down most of this point. You had a downward bias, and then from here on, you kind of had an upward bias. Although this this is not a very strong upward trend, and especially when you get in tight stuff like that. So not a lot going on here. A few more trades today than there were yesterday, so that's a good thing. I did want to show somebody asked in the forum yesterday. Let me talk about this right here about understanding the midpoint or the center of the pattern and things like that. And generally, once you get a leg down like that, and then you see a two-legged correction, if prices start down again, just measure that leg and then look for a measured move. And you can see we went a little bit further than that today, but then that gave you a great target, and we bounced right out of there, and it was pretty much kind of an upward bias for the rest of the day. Here's another one. I showed you this one. This is not as big a pattern, so you don't have a two-legged correction, but here you kind of do. You started up from there, so that would be your target. And you can see we didn't quite make that when we ran out of time, but that looks like the center of a pattern after this move up. So experience is going to help you with this more than anything. These are some of these. Sometimes they're easy to see. This one's not too hard to see. You can clearly see that two-legged move there. And then when we started down, you can see that looks almost like one move. So you're going to get another leg down most likely. And notice we bounced to the tick there first, but it pushed down there and ran a little bit lower before it reversed. So hopefully that helps you with that. What I mean when I'm talking about the center of the pattern. A lot of times it'll be a real clear correction. This is two-legged correction. It's not real clear because they're not real equal measured two legs or whatever. And this is the same thing. It's just a larger correction. And then I did the same thing here. You got this move up, and then you had the bigger correction. So I look for a measured move. And you'd be surprised how many times you'll see these turn to the tick. So, and they work really well. So be aware of them. But as you can see, this really was just a range day. And we had a little bit of a trend down, then we trended back up, and we really kind of closed almost unchanged. We closed yesterday around, where did we close in here yesterday? It looks like we closed it. Oh, that's probably the open actually. Oops. We closed at 41.81 yesterday, and today 41.78. Of course, this is just the 315 halt, and it'll pick back up here in a minute. So I don't think the close actually counts till 4:30 now. So if you look at this bar right here, you can see the time is, that's actually, yeah, 4 o'clock. So yeah, it's between 4 and 5, I think. I always forget. I'm never trading at that time. So yeah, I think the market closes. It'll halt at 3:15, then reopen at 3:30, I believe it is, and then it goes until 4, and then it closes from 4 to 5. I believe that's correct. Like I said, we don't trade really after 2, so I don't pay much attention to it. But I believe that's the correct trading hours. If not, you can go Google it to find out. But anyway, let's talk about the trades. Let's back out here, or zoom in, talk about the trades, get a little closer view in here. And again, we had this two legs down, then we had a little correction, we started down again. There's a lot of sideways action here, but you can clearly see we're kind of working lower here. I originally had this a little flatter, but once we started turning lower here, I corrected it some. But anyway, we had this one working up. We had a break, new high, and then we tried to go higher once. We tried to go higher twice, and it really turns down, kind of confirms this line to some degree. The biggest thing, it's a failed second entry long. So if we turn down right there, there is a little bit of congestion. But even if this is going to be a range, you got a little room down here, back down to the lows, a little bit to here. I like this just because there's a trap right there, and it looks like there's going to be a trend line here. So quick, easy move, and then it just kind of works sideways again. And this really kind of confirms that trend line right here. And again, you make a double top there. This is really just kind of a lower high on a second entry short. Notice that low. That's a new swing low. So first entry and then second entry. It's not a great signal bar, and it is a little bit sideways. I went back and forth about whether that one should be green or if we could make it red. I think it's bearish enough. The problem is it's a little sideways, but you can clearly see there's a triple test there. Everything's kind of bouncing off that resistance across there, the EMA. And if we break lower here on this second entry after trying to go higher 3 times, it's probably going to trap some people. And you can tell it was a trap by how quick that bar right there, the way it rockets down real quickly, tells you all you need to know. It definitely trapped some people on the wrong side and they had to get out. So moves on down. I don't see any more entries in here. We move on down to the low of the range, and then we just start working sideways. Again, you made a high. You try to go higher once. You got a double test right there and a nice little small bar. It's a little bit of congestion there again, but you can clearly see that range. And this is at the top, and I mean, this bar is like 3 ticks. Very low risk. I'm going to take that most every time. Just because there's so much resistance there and there's plenty of room to get out, and off it goes. There's a lower high here, but it's right into what looked like support at the time. It turns out that this is a midline and you got a bigger support down here, and this is just a midline. So, but you don't know that at the time. That's the support at that point in time. We bounce here. This one didn't really leave you much room. It would have been nice. I think it's too early to be fishing for a bottom just yet, so I don't like that trade. But it comes back up. We make a new high. You try to go higher once, twice, and you can clearly see this trend line's in play now. This actually breaks higher and fails and turns down. I'd probably wait on this bar to close and then put a sell stop below that. And you can see that was a quick, easy move. And again, it's tempting to try to pick this long being that far away. But I would wait. I just think it's too soon because this channel is clearly in play and there's been no break of it or anything. There was a little break up here in the overnight, and that's what kind of confused and made this a little harder to find. But you'll see that occasionally. If you might see a break of the trend line during the overnight, but it doesn't really people ignore it, traders ignore it. It doesn't really act as a close outside the trend line, so to speak. You'll see that quite a bit. And the reason usually is because the volume's lower and it's easier to manipulate the market a little bit. So if this happens during the overnight and then suddenly you're paying, the trend line is holding again, pay attention to that and go with the trend line. So that's the reason I like these two. So this is a failed second entry long, a lower high off a double top two, a big bearish bar. You can see the yellow channel. If the channel's in play, there's plenty of room. And if the trend line's in play, we may go a lot lower. We did have this measured move already, but with the trend channel still in play, with it holding and it being a failed second entry and all that with that big bearish bar, I'm going to take that trade. So again, we talked about it was tempting to go long here, but I think it's too early. Actually, we talked about that here, I believe. And even here, or I can't remember which one we talked about. This one's similar, but we're not very far away from the EMA here, and the trend's still strong. Here, at least we do have a range, And we're probably going to pull back and test that and maybe the EMA anyway. But I think it's too early because this short-term channel is still in play. There's nothing really down here. I mean, we almost got to the other side, but we didn't quite. The stem's way down here. And somebody asked, I get this question all the time, do you count the stems? The stems are part of the bar. And so what we consider an entry or a break higher is a break above the high or low of the bar. So that includes the stems. I don't know why that's so confusing, but it tends to be confusing for people. The stems are part of the bar. So in order to get a break above the high of this bar, you got to include that little bit of stem right there. Let me zoom in here a little closer where it's easier to see. But let's just say, let me find a good one. Well, it's probably not going to be a good one now. But let's just assume that you wanted to go short below this right here. We wouldn't. There's no trade here, but just assume you wanted to go short. You're not looking for a break below that body right there. You were looking for a break below the low of the bar, which includes the stem, which is way down here. So your sell stop would go one tick below here, not one tick below the body. So don't confuse those two. And again, I don't know why that seems to be confusing to people, but a lot of people get that confused. So you include the stem in the highs and lows of the bar for any of our counting second entries or failures or whatever. So hopefully that's clear. Again, we bounced here. It's too early to be, and even though we're finding support here, there's no rejection off these lows, so you can't go long right there. It's so tempting to try to get long, especially here when you start making a little higher lows, but it's just too congestive. There's no rejection. It works, but you would have gotten burned in here a couple times maybe first. So just skip those. Same thing here. You don't really get a setup. There's no good signal bar. There's no rejection here. If you'd had a good signal bar, I'd probably tell you go short on that one because the bias is down anyway, and that's your first break of the channel. And there is resistance up here. You might have moved this line up by that point to here because you're getting more touches and closes right there. So I would have moved that up by that point. We'll get it out of this next little channel because I don't think it's included. I don't see it being part of that one. I think this one's totally separate. But we turn down, and again, we're bouncing. There's no rejection down here. There's no setup bar anyway, so no chance to go long. And then you're up here near the resistance. No short setups, really. You might have been tempted to go short here. And if you had, I think it would have worked, depending on if you waited on this big bar and went short. No, you can't get out. But I believe if you entered on an engulfing bar, you would have eventually got out if you were willing to ride that out. But on a big move up like that makes a new high, wait on a lower high and you see you never get one. And that would have kept you out of that. Then you fell out the bottom, but there's no room to get out. Finally, you get a little tiny bar up here with enough room to get out that closes very near the resistance. That's one to look at. Again, it makes a new high, so you're probably better off to wait on a lower high. But if you want to be aggressive and the bias has still been kind of downward, it looks like it's trying to change on us, and we're really close to a measured move there, as you can see. So I like that one if you want to be a little aggressive. And there is a hidden second entry in there too, but maybe you go short right there. And we're just continue to, you can tell the range is still in, or this little range is still in play, or congestion, whatever you want to call it. And then finally you break out, pull back. Look how many times we've tested that trend line. And it actually breaks lower and fails and turns up. I like going long on engulfing bar. You could still go long up here, but that's a really big bar. 11 ticks, so it's going to take you 12, 13 to enter it, one tick above and put your stop below it. That's a pretty big bar on a day like this for coming out of this congestion or range. So I would wait on that trade. I wouldn't, or I would not enter up here. I don't think I would only enter on an engulfing bar. And engulfing bars, if you're new to chart reading and you're not real experienced, don't trade engulfing bars. You need to know what you're doing. You need to be a good chart reader. I told somebody that earlier today that was asking me about a trade right up here where they got trapped in this right here. It's because they're engulfing bars and they threw them off. So if you're not really good, I mean, obviously here, this one is one of the easier engulfing bars because it breaks lower at the trend line, bounces right off of it and turns up. I mean, we understand what prices are doing there. So that's why I like going long on that one. Here, when this bar broke lower and then turned up, you would think prices are probably going to go higher, but you just don't know that yet. That's just a first entry basically. And so, uh, it's not off the EMA really. You could look at it as a high or low maybe, but we just shot over the midline, but turned back and came back. So you'll probably get two legs down. So that's what happened. You got two legs of correction, and there's two legs up, and then you actually get another leg down. So it's hard to know what's happening there on that engulfing bar versus right here. We kind of understand that we broke lower and bounced off a key entry point off of the midline, or I'm sorry, not the midline, but the EMA, the trend line, and actually the midline of the little tight channel there. And it's like a breakout pullback long. And so we kind of understand what's going on there, but here you don't know what's going on. Prices are just kind of in limbo and undecided. So anytime you're not sure what prices are doing, don't enter, and it's just hard to know. And so on a engulfing bar like that, just skip it. That's my whole point, I guess. So, but let me show you something here. Notice that new high and you work down and you broke higher. When it broke higher above this bar right here, including the stem, that's a first entry. And then it broke lower and then turned and went back out. So technically that was a second entry when this bar went back out the upper side on that engulfing bar. So that's a weird second entry on an engulfing bar, and they're all inside this big bar, so it's a little bit possibly congestion. So that's one, just skip it. That's what I'm getting at. And so that was a weird second entry. And then I think it broke higher here first and turned down and then bounced off the trend line and kind of traded back up and then made another inside bar. So prices just don't know what they're doing there. It's hard to understand what's going on other than we're going sideways. So don't enter there. And finally, we get a break. We drop down here. We make a low. Then we make a higher low with a nice signal bar right there, way away from the EMA. I like that. It's a little aggressive. You could look at this as congestion, but again, we understand why we're getting congestion here because we're getting so far away from the EMA when prices have been going sideways and then up with an upward bias. So the odds are prices are going to snap back to that EMA at a minimum, and that's exactly what they do. So I like that one. Now we come back here and get a failed second entry short, but we're still below the EMA. That's not what a reversal looks like. So even though it probably would have worked, stay away from that. And we're just working sideways again. You get a big bearish bar here, but it's just right in the middle of all that congestion. We've been bouncing right there with support. Just not a good place to go short. And we actually make two legs down. Notice that high, first entry, second entry. So you get a second entry down here. Even though we're not looking for second entries, if you get a setup that meets our criteria and it happens to be a second entry, then that gives it a little more weight. But notice that nice bullish bar, a little bit of room back to the EMA. We've bounced here multiple times across here now. We're probably going to go back to the upper side. And actually, you might have even played this a little higher. And I really think that's the way I started. I kind of tightened it up a little later, but that's the way I was actually playing that at the time. So this was like a little failed break lower. And that's why I really liked it. Again, a lot of times you're better off to wait on the high or low, but you don't get one here. So I like this one just because it gives you a chance to get in at the very lows of support when we've been going back and forth consistently. So when you start to go back and forth consistently, you might get a little more aggressive instead of waiting on a high or low. It's when you touch, the ones that gets me is where, let me just show you an example. Where, okay, this is a good one here. Prices have been working down, and you kind of got some support here, and then they drop down, and then somebody tries to buy that because they're thinking, hey, it's a failure out of support. Well, you don't have any previous information to say, hey, yeah, this is a place where we're likely to bounce. But look right here, we bounced across there 3 or 4 times. Here we bounced across there multiple times, and even again here, same thing here. We've been bouncing across there multiple times. We turned down here multiple times. Just prior to that, we were even turning down a little bit lower. It just happened to move up a little bit. So make sure you understand that. The more times you're turning, the more consistent it is, the easier it is to trade. Like this is a pretty consistent support and pretty relatively consistent resistance. Although you just don't get many setups. This is about the only one that gives you room to get out. Take it. And none of the others did. Then we run up here, and then we already talked about this. We just kind of get to going sideways and a little congestion, and it drops down. We might have already talked about these trades. Yeah, the higher low. Then the second entry. Okay, yeah, we'd already talked about these. So second entry long right there. Again, look how many times we bounced right there. Rather consistent. And there's more support right here, so that even gives that low a little credence. So that's why I like this one though, because it just gives you a chance to get in very close to the lows. And on the second entry, there's clearly 2 legs down. So that could be the center of the pattern as well. Measure your first leg, and then we went a little bit higher than that before you got another 2-legged correction. So let's do this. We'll measure this leg and then measure this clear 2-legged correction. And again, we went a little higher. But that would have given you a nice target. So the bias is up now, so it's not surprising that your targets might go a little further, and when the target's down, if you might go a little further. Doesn't mean that you can't come up short either way on either coming down or going up, but with the bias, you're more apt to get a little bit more of the measured move if you're entering with the bias. And here the bias is clearly down. Look at the EMA pointing down. Most of the price action from here all the way down is below the EMA. And then here, you can clearly see we kind of get above the EMA, and most of the price action is above it. We have this correction, and then we're back above it again, so the bias is still up through here. So hopefully that, and then suddenly we're going back and forth again. Anytime, people will ask me, how'd you know this is a range? Well, first of all, look at the big picture here. Clearly we're trending down here, but right in here we start going up and down, back and forth. Look at the EMA. We're above it, we're below it. We're above it, we're below it. We're above it, we're below it. We're above it, below it. And then we're kind of trending up again, and then above it, below it, above it. When you're swinging above and below the EMA, even if it's pointed, still trending down, it's got range characteristics. A good trend, most of your price action is going to be consistently below the EMA. See, this was clearly a range here. This is what a trend looks like. All your price actions above it for the most part. Here's a downtrend. Look at all your price actions below that EMA. Same thing here. This is a clear uptrend right here because all your price action is mostly above that EMA. Here you're swinging back and forth. So now you're going sideways. Look how flat the EMA got. Now you're just kind of ranging there. And then the trend picked back up because the bias was up. So use that. There's a reason we use the EMA and teach you to use that. Use it. It's probably your best clue to know if the market's trending or in a range. It's probably your #1 clue. So anyway, 24 minutes and we didn't have but a few trades. So we talked about some important stuff though, so it was worth it. I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com. And we'll see you next